we at a point now where the tick up in sales is more than offsetting the loss in sales during construction?
Yeah, we turned that around the first quarter of this year. So last year it was a little bit of a drag because we were remodeling so many restaurants. We had that downtime that you described, but now we flipped a little bit. So it's giving us a little bit of a tailwind as opposed to a headwind, which always helps.
But is it fair to say you're extending sort of this investment window? And at what point, I mean, obviously shareholders are giving you the keys because the stock's been hitting new high after new high. But at what point does that become more of a concern for investors?
Well, I think we need to continue growing, don't we? And I think if where we're investing that money is helping drive growth across 38,000 restaurants, then I think the shareholders and investors will be satisfied. But also we want to bring our owner-operators along with us as well because they're investing their hard-earned dollars as well. So that always means we've got a business case. You know, the owner-operators will want to see a return on their investment just the same as a shareholder would. So I think that we've got a wonderful check and balance in the system to help us make sure we spend that innovative money in the right way.
Mm-hmm. What has dynamic yield brought to you yet so far?
A lot of excitement, first of all. So it was our first acquisition for 20 years. And it was an acquisition in a way that was different from the past. It wasn't looking at different restaurant businesses to try and expand our footprint. It was bringing a capability, an IP, and some talent into our business that can help us accelerate the growth model. So we completed the deal mid-April. Within 2 weeks, we had that technical capability in 800 drive-thrus here in the US. So it's a very, very rapid execution implementation.
Labor, all right, under severe pressure now to raise wages. You've instituted some anti-harassment training, but where is the employee in terms of their relationship to McDonald's? And do you think 15 on a federal level is a reasonable possibility?
I think overall, if you look around the world, actually, not just the US, we're looking at all of our both mature and emerging markets, we're finding the labor pool is getting tighter and tighter. And when you're in the service industry like we are, we have to have well-motivated and fully staffed restaurants. So yeah, we are working hard on making sure we keep turnover reduced, we keep pay competitive. But it is tight. We're finding this is tight and it's been for a number of years.
We did a documentary on McDonald's over a decade ago, and a big part of that piece was about the company's ambitions in China. It was a big strategic step. And now where does that stand in light of everything we now know about the U.S. relationship?
I think inevitably it remains a big bet for us. Absolutely. We got new strategic partners there, which was, so we got new partners within the country now who've actually accelerated the restaurant opening program. So last year they opened over 400 restaurants in 2018. They opened another 400 restaurants in this current year. It has now become the second largest market by restaurant number in our entire 120 markets, just after the US. So we're exactly where we want to be. We've got a really strong presence in the tier 1 cities, and now the partners are helping us expand into tier 3, 4, and 5 cities, going further west through China. And we're confident in the market, and we're confident in the partners we've got there.
How do you quantify or characterize risk to the brand as an American brand, to regulatory pressures in response to something we might do as a country?
I mean, ultimately, none of this is new to us because we operate in 120 countries around the world. So there are always going to be issues at a geopolitical level or a macroeconomic issue. And part of our strength is our diversification. So clearly we want to be sensitive to it, clearly, but having that local ownership helps localize McDonald's in China. And we have a minority partner as well from the US as well. So yeah, I think we have a good balance now between the ownership there and the future we have. And you know, clearly, wherever we try and establish our business, we will have local supply chains as best we can, local management, local owner-operators, and localize McDonald's to be as effective as we can. And I think consumers recognize that. Different menus, different tone of voice, you know, different style of marketing. So that, I think, entirely helps insulate any sort of issues if any events unfold.
All right. But fair to say, all the recent tension has not altered McDonald's strategic or tactical strategies in China?
Absolutely not. In the shorter term, business has slowed down a little bit, just as the economy is slowed down a little bit in China. But in the terms of long-term interest, it's a very important market for us, and I think will stay that way for as long as I can imagine.
Last thing here, you've been at the company, I think, 15 quarters now, and in that time you've changed the food, the restaurants, M&A. I just wonder, given the string of comp growth, how you feel about your tenure at this stage. We know what the stock's done.
Yeah, I mean, it's less about my tenure. It's more around, I think, getting the sort of the culture of the business one where we got more speed, more agility, open-minded to taking a little more risk. And fortunately, that has been working. I think we're getting more things right than wrong. So, yes, if we complete this current quarter, then that'll be 16 quarters of growth for 4 consecutive years.